Ladies and gentlemen, good afternoon, almost, not quite. It's nice to be back. After a year or so of no proper investment conferences and things like that, it's good to see some familiar faces. And the rest of you, welcome. And you're joining an investment at a rather interesting time, to say the least. Now, we're in one of those worlds where you really couldn't make it up, could you? Here we are trying to clear out CO2 out of the atmosphere, and then we're worried about the fact we're not producing any CO2 so we can have our beer. I mean, it is wonderfully illogical, the whole thing. This is not going to be death by PowerPoint, which I normally try and do for people. So it's absolutely no slides at all. You're just going to have to listen to me for a few minutes, or if I were you, just gently doze off. You may find that more comfortable. Now, despite what everyone would love to tell you at the moment, actually the global economy has not ground to a halt. The global economy is actually progressing and is recovering after what has been the most astonishing period of time where effectively you had a series of global heart attacks in the very different economies. And it's interesting to see how different countries have managed their way through it, some well, some mistakenly, and some in a very controlled manner. And actually, overall, I was actually quite impressed by a lot of the central banks and finance ministers as to how quickly they reacted. And of course, with the joy of hindsight, you'll see the bits they've got wrong, but that's inevitable. That's for the politicians to bicker over. What I'm actually interested in is to see actually what happens then the next stage of the global economy so we can position our portfolios to really take account of it. Now, the good news is, as you can see from the show today, okay, this is an early stage recovery, but you've never had so much choice and opportunity for investments. You only go back a few years, and you are incredibly constricted. It was stocks, that was it, and you had to go through a broker. You don't have to go too far back, a pretty big bang, when commissions were fixed, and some would say so are the prices. The range of different alternatives was quite limited, and other things were just closed to you. You don't have to go too far back when we don't even do proper foreign exchange trading or anything like that, let alone even haven't been able to take actually any amount of money out of the country. So here are the opportunities to actually learn about all the various different techniques and different areas to deal with. But basically, remember, keep it very, very simple. If you don't understand what's going on, that's not your problem, that's their problem. They can't explain it to you. So be wary, because there are still scoundrels and scams around, sometimes in the most public of places, and please be very wary indeed. One particular area which you can see some opportunities of the development we've had recently of SPACs or SPAVs, special vehicles for investment, often run by SPIVs as far as I can work out, where you actually see, and quite literally in terms of one of the memoranda put out, to be able to invest in opportunities that we perceive to be sensible. We're going to invest in someone who says we're going to invest in something we perceive to be sensible, when you have no idea what it is. As I say, you couldn't make it up. So, let's have a quick whiz around the world as to actually what's going on and give you some idea. So, first of all, let's start with the United States. The United States economy actually is in not bad position. Remember, the primary driver of the US economy is Mr. and Mrs. Joe Schmo living in Little Rock, Arkansas, shopping in Walmart. And if they're upset, it's amazing how quickly the rest of the world gets to know about it. And why would they be upset? Well, if you go back to the financial crisis, they were upset because the value of their house dropped dramatically. In New England, that was by about 40%. If you go back to Arkansas, you'll find that some prices dropped by over 60 or 70%. It was really quite astonishing. And of course, what happens then? People lose confidence, their primary asset is now stuck or devalued, and therefore they stop spending, they stop investing. And the world very nearly ground to a halt as a result of that. But there was action taken, and the Americans are far more effective at dealing with their banking crisis than we were, and the economy got moving again really quite quickly. So, after what's happened in the past 18 months, the American economy has picked up. You're seeing more consumer expenditure going on. Inevitably, you've got the V-shaped recovery. You have to be careful which way around you do the Vs as to whether they're taking the mickey or not. But actually, you did see a pickup. Inevitably, though, what you're then going to see is then a slowdown after that, because obviously it wasn't going to continue at levels of 5, 6, 7%. So you're going to see something now which is going to be much more wobbly. However, actually, in terms of the demand is still there. Do not underestimate the support bill being put through by the Biden administration, watered down hugely from $3 trillion Trillion. Why don't we just throw a trillion around? You can't even get the trillion noughts on your average calculator. Yet somehow we just managed to it's just another trillion. So now we're down to about 1.7 trillion overall, cut back. That's still, nonetheless, in real terms, considerably larger than Roosevelt's New Deal back in the 30s. So do not underestimate the power of that coming in. So the American economy also going through a huge change in terms of its of the technology and the application thereof, and obviously you've seen that reflected in technology stocks. But more to the point, actually, in terms of actually the reinvestment in America, a lot of that is still going on as companies are desperately trying to change to improve not just their productivity through better technology, but through those initials we're all getting thoroughly fed up with of ESG, to try and make themselves look more socially acceptable. I suppose I should mention ESG. Be wary of greenwash. There's an awful lot of, what's the technical term? Lying going on when it comes to some of the people claiming to find themselves carbon neutral. After all, we no longer have oil companies, do we? We now have energy management companies who will give you a date sometime in the future, which I hope you'll forget, by which time they claim to be carbon neutral. So be really rather wary. So the US then finds itself in a position where domestically, remember, the US does not actually need the rest of the world in terms of running its economy. It needs supply and facilities and things like that, but it can operate in a very insular manner. Having said that, America is dependent on the rest of the world for one key area, and that is, of course, its financing. Who is the world's largest purchaser and owner of American debt? Well, most of the time it's China. Sometimes actually it's Japan. But actually you'll find yourself in a position where the Americans and the Chinese are in a symbiotic relationship with one another. They will argue and bicker with one another inevitably, but they can't actually do without each other. The question is, we'll come back to the question of China a bit later, about whether that relationship can continue given the political arguments that are going on at the moment, particularly with regard to not just some of the contractual and economic ties between the countries, but also some of the politics in terms of the likes of Taiwan and other areas of significant border dispute. It'll be interesting to see just how strong the Biden administration is going to be about all of this. He does seem to be changing his position really quite remarkable speed. So, in America overall, I'm actually quite positive that what we're going to be seeing is further growth there, providing this bill does go through, which is actually, I think, very quite likely now, and giving that underlying support. Markets have already moved significantly, as we all know, but moved actually in a relatively narrow range overall, because what you've been seeing is primarily, obviously, the tech stocks. You didn't have to be a wildly clever investor over the past few years just to go and buy an ETF, an American, or just, frankly, buy the ETF and just buy the NASDAQ. You would have done extremely well out of doing that. Further investment knowledge wasn't really applicable. That's not going to continue. So now is the time, actually, you can find broadening out for those areas which are still going to be vital and still going to be used. And I think still, look at those ones which have been left behind. And I know they've already been talked about, as we've seen, most recently you've seen how the airlines have come back, the banks have come back, as you're seeing more of the other areas of the economy starting to move through. And I think that's actually going to be really very exciting indeed and provide those opportunities. Be wary. We're going to be headed, this is autumn, as we all know, the meteorological stormy weather. We're also going to find financial stormy weather as well. There are going to be some more really quite significant bouts of volatility. And as ever, the question will be, are you going to use those as opportunities to go in, or is it the start of something more unpleasant? Well, I've always found over my years that I tend to actually, every time I think things are going to get more unpleasant, and I then come out of the market and stay out of the market, I end up losing out. There's nothing wrong with being a longer-term investor, as long as you think the rest of the world is actually going to continue and actually getting the benefit of long-term growth, but compounding of your returns. Compounding of returns may sound astonishingly dull, but that's actually where most of your growth is actually going to be coming from, which is why we need to all be investing from a much earlier age. And I, for one, would suggest the best age to try and start investing is 0. Not necessarily your decision-making may be very good, but maybe your parents could try and help. So, America now finds itself in that position where it is starting to come back. You've seen now, obviously, with the price of energy going up dramatically, but of course that benefits. We've got the frackers coming back online again, so you'll see more benefit coming through on that one. The concern I probably have primarily in America is actually still going to be down some of the regulation and tightening that we're going to be seeing coming through, particularly in some of the trading scandals, some of which haven't broken to the surface yet. So that's quite encouraging. Now let's go back to the EU. The EU now finds itself in the position where it's almost leaderless. Mutti Merkel is gone. What are we going to do without her? She wasn't formally running the place, was she? But actually, in reality, politically, she was the driver of the EU, much to the annoyance of President Macron. He now wishes to try and assume that mantle, but won't be able to do so because he, frankly, doesn't have the character and strength to be able to do that, nor necessarily the credibility. The EU's got some big issues to try and manage. I'm not anyway going to touch the issue of Brexit, because that's done and dusted. We're living with the effect of it. We can argue about that till we go blue in the face. Let's look at actually the elements that are now impacting. For the EU, they've got some huge strains. And primarily one you saw coming out the past couple of weeks, but one we identified several years ago, a group called the Visegrad Group in the EU. And this consists of Poland, Slovakia, and Czech Republic and Hungary. And their line is very simple. We were not run by Russia for 50 years to be now to be now run by Brussels. We demand you give powers back to us. And you saw last week the arguments of the Polish courts as to actually who's actually got primacy. Is it EU law or is it actually a Polish law? Well, actually, it's quite clear in all the agreements that have been signed, it would actually be EU law. But that's not the point. The point is those nations have been pushing for some time for more powers to be returned. If only Cameron had been paying attention to that, he would have actually had some quite considerable support, rather than the rather stupid, dogmatic way he went about it. So it's going to cause some problems here as Brussels finds itself with some considerable difficulty in reaching unanimity. It's not a cohesive group. Are you trying to form, as France would like to have, a United States of Europe? Well, that's actually what you find a lot of the countries did not actually sign up for, including the United Kingdom, hence our issue with Brexit. So the key issue now to look at the EU is actually what's going to happen to the currency. Is the euro going to survive? Well, let's be clear. The answer is very, very simple. No, the euro is going to fail. Not yet. It may take some time to fail, but it will fail. Why? Well, to run a single currency, we have a single currency in this country, don't we? In the pound. To run a single currency, you've got to have free movement of capital. You know, money can be passed down to Cornwall, gets spent, and then comes back through the banking system, back through the city again. We have a single tax system. Now, of course, we now have variations, because now we have the devolution. We've now got the Cranky's love child running Scotland, well, Mrs. Sturgeon, and who I have to say has achieved one amazing thing. She managed to increase Scotland's deficit so it is actually greater and rising faster than that of Greece, which is actually really quite remarkable effort on her part. But the point is this. Although they'll have difference in taxes, primarily the fiscal system is the same. It operates in the same way. So we can have a single currency. As long as you have free movement of capital, you have harmonization of banking regulation, of financial regulation, and harmonization of the fiscal system, your single currency can work. There will be stresses and strains. That does not apply in the EU in a coordinated basis throughout the entire area. It will vary a lot. So on that basis, you're going to find those stresses and strains will eventually start pulling it apart. Are you ever going to get the Greeks to be paying the tax system, have a tax system in the same way as the Germans do? No, it's not going to happen. And the Germans equally aren't going to let the Greeks get away with it and say, well, we'll just write off their debt and be done with it, even though we all know that the Greeks aren't actually going to be able to pay that debt back. So we're in this strange sort of limbo where everyone's sort of ignoring it for the time being. Perhaps it'll all sort of go away. Well, it won't go away. It'll come back with a further crisis of confidence in the euro a little bit later. There are things they can try and do about it. It's been done before. It was done in Belgium, now it's about 70 years ago, but also in South Africa. You split the currency. So you have a domestic currency and you have an international currency. So in the case of Greece, you would maintain your debt in euros. The debt, effectively, is now being made without date on it, so it's never-ending debt because it's never going to be paid back. But you just have a low-cost endless debt just sort of sitting there, and it'll stay in euros. You then have the tradable olive or something like that, which devalues by 25%, and the Greek economy starts moving again. Unfortunately, they won't do that. It takes a level of imagination to try and carry that out. But I can imagine in due course, you may well find the euro splitting almost north-south between a euro and a zero, as you'll find the southern countries operating in a rather different manner. That won't happen yet because there hasn't been enough pain to actually make sure that decision has to be made. So we'll try and stay with it for the time being. So that could happen in 10, 15 years, but it is a matter of time. Overall, what you can find, though, is the stresses and strains in the EU in terms of differences in terms of growth. And this is where you're now finding in terms of Eastern Europe, the problems they've had there in attracting more investment coming in because of the fall off in confidence if they don't think the EU is going to work as smoothly as before. Therefore, people are holding up investment. Why is this? Well, one of the reasons is because we left. The EU does not want Britain to be seen as a success story by leaving the EU. Not necessarily out of personal bitterness, but actually just in terms of making sure the rest of the club stays together. Because they sit there and say, well, look, they've broken away and done quite well, why don't we? In the same way the EU doesn't want to actually see Scotland joining, because otherwise you'll find the same argument with that with the Catalans in Spain. It ends up as a dysfunctional political problem. So the EU is going to find that really quite difficult. However, what you have got, though, is a system whereby, despite what's happened over the past 18 months, it has recovered, and you're seeing some recovery at a fairly weak level overall. The primary benefits obviously have been some of the high-tech companies, but what you're now seeing, though, is a probably greater movement now towards some of the more domestic ones as you look for more of the value areas starting to pick back up again from the areas that were so very heavily hit. So the EU is going to find trouble. Where does the leadership come from? Is it from Germany? Well, name one other German politician, apart from Mutti Merkel. And the answer is, well, it's really quite difficult. Unless you happen to be German, you wouldn't know it. So that sort of lack of dynamism, leadership, vision as to what happened next, every time the EU finds itself in that sort of position, it tends to actually economically lead to certainly a slowdown. And I can't see at the moment any particular drive as to which is actually going to be pushing the economy much faster. Bear in mind, they've done another huge amount of QE, and they're going to continue that support. One of the continuing themes that we're going to see over the next few years is this level of central bank support. If you go back, let's say about 30 years ago, to any economics book, you'll actually find, look up the phrase there in terms of being able to have quantitative easing. And it didn't exist. The concept of it exists, but the actual term didn't exist because no one had really considered that actually was it going to be viable. And quantitative easing, of course, has been a great success. I'm afraid Mrs. May was wrong. There is a money tree, and it was called quantitative easing. The trouble is that money tree can get stripped bare quite quickly. When we went through the financial crisis and we had quantitative easing, I remember as we drew towards the end of the worst period of that, just sitting down discussing, could we go through this again with another round of quantitative easing? And just everyone said, no, we can't do that again. It'll cost far too much. We'll lose credibility. And that's exactly what we have done. We didn't call it quantitative easing, but it's exactly the same process. And that can continue until you lose credibility, until the emperor is seen to be somewhat sartorially challenged, which in the case of Britain means people losing faith in sterling. Now, they haven't lost faith in sterling yet. Why? Well, because we've actually got quite a good history. We have never reneged on our debt. Every other major nation has at some stage. Yes, even the United States. Well, not actually the government, it was actually some of the states. But we've actually got a good reputation of being trustworthy. But we are, and sterling is a relatively small currency. Although still a reserve currency, definition of reserve currency, countries will keep an amount of sterling in their own reserves. And so whilst that's still participating, it gives us the opportunity to carry on with quantitative easing because people trust us and they will buy our debt. Push that too far, and it'll be then much more difficult. And that's an issue that Rishi Sunak is going to have to address with regard to the cost of that debt as well, because although, if you look at the interest levels in terms of being so low, a small rise in interest rates will actually impact on our debt, even though a lot of it is long-term priced. Nonetheless, it will have an impact. To give you some idea, the latest figures we had were showing that because of the Debt Management Office, which is based down in South Croydon. There's nothing particularly interesting in South Croydon, I find, but the Debt Management Office operates independently from the Treasury, and their job is solely to manage the debt. And one of the key things they've been doing is actually rescheduling a lot of the debt, turning over a lot of longer-term, more expensive debt into much, much cheaper debt now. Very good opportunity, and locking it at a low price. However, any increase in interest rates will impact on that. So currently, our interest rate payments are around about 42 to 45 billion a year, which is just slightly less than our defense budget. It would take very little in terms of interest rate movement to find ourselves up at a position of about 60 to 70 billion a year just in interest rate payments. And that would actually cut out, that's actually more than you'd be getting in excise duties in terms of income for the government. So we've got to be really very careful actually how they manage to do that. So the EU's operation of quantitative easing, they've been able to carry it on. Why? Because it's frankly backed by the Germans, and they'll carry on doing it. They'll keep the game going. However, if people start losing faith in what the European Central Bank can do, and there's further strain on the euro, that's when you're going to find any of those areas and finding it much more difficult to finance themselves. You cannot keep on just using quantitative easing endlessly. The great thing about QE is, of course, it's not a confidence trick, but it is certainly a trick on confidence. Because, of course, in this country it works quite nicely because you have, obviously, the Treasury and you have the Bank of England. And so someone is actually going to say, well, let's issue gilts, and so we'll buy those gilts. And so one side of the balance sheet is actually issuing the gilts, the other side of the balance sheet is buying the gilts. Brilliant. How do I get rid of it? Well, because I've got an asset here and a negative there, I can net the two off. So in theory, I could do that, a high portion of that debt already. But if you did so, you'd lose confidence almost immediately. But that's something worth remembering when people talk about the eye-watering amounts of debt that is being built up. You do have the ability to actually manage that down in due course. Not all at once. You let that quietly run off, and that's how you try and manage it. So EU growth will be coming more from quantitative easing. Are you seeing more investment money coming through? In fact, you're seeing a slight slowdown in investment money coming through, particularly from outside the EU, and particularly from the US, unless they're actually going in to buy assets, as of course you're seeing here. Okay, let's spend a bit of time then talking about the UK. In the UK, there are three numbers you must remember. 5, 8, and 14. 5, we're still the 5th largest economy in the world. Some people sit there and say, oh, France is about to overtake us. No, they're not. Actually, India's probably about to overtake us. That's quite likely. But, okay, so we drop down to 6. That's still significant. They're small. 8, we don't make anything anymore, says the BBC every night, seemingly. Well, if we don't make anything more, how come we're the world's 8th largest manufacturer? We still make quite a lot of stuff. Go to the business parks of Britain. You'll find they're mostly full. There are a lot of areas, obviously, which over the past 18 months have suffered, and there are some areas which we're never going to really recover. But one I always like talking about is actually Accrington, or to give its full name, Accrington Stanley, I suppose, or its real full name, Accrington Stanley Nil. And you go to the business park there, you do an interview with a local BBC station who say, I don't know why you've come here, we haven't recovered from the last recession. You go to the business park, and I was there, actually it was about over a year ago, about 18 months ago. It was full, shortage of labour, desperately need more people in there, and actually doing really rather well. And actually not too far away, actually there was an opening up of a new cotton mill. We don't have cotton mills in this country anymore, but we're actually producing the stuff. So don't believe everything you see in the sort of popular news the entire time. And 14, not a very precise figure there. You could argue this between 14, 15, and 16. We don't export, they tell us the whole time. We are the 14th, 15th, or 16th largest exporter, which is, I sort of think, still quite remarkable, given how much it's changed and how useless our banks have been in actually providing any support for all of that. So actually, those, I think quite comforting figures. Now, where does the growth come from, therefore, for the UK economy? The growth comes from actually the area where you can see actually the investment is already going and where you're seeing most job creation and most companies being set up. Because one of the things that stands us apart from any other European nation is the number of small businesses we're set up. We set up more small companies in this country than Germany and France put together, which is quite astonishing. Now, as a nation, more as a percentage than many of the United States individual states. And I think that's very encouraging. And where are they setting up, or what are they setting up? Well, they're tech companies. In those little tech hubs, you know, those also rather annoying terms of Silicon Roundabout, Silicon Beach, Silicon Glen, Silicon Gorge, apparently that turns out to be Bristol, Silicon Fen, and all of those other ones. So basically what you've got is little tech hubs, and they breed. Once you get 2 or 3 together, they start spinning off bits and pieces. And this is where you see the Americans coming in here, buying up these assets, because this is great intellectual property, but that's the problem. We're losing that. And one of the issues that certainly is high on my agenda is to try and encourage more investment into these development businesses. There are lots of startup funds. We have a London Stock Exchange, really good at dealing with larger companies. Where are the bits for the small and medium-sized businesses? And I don't just mean AIM, almost below that. And these are really exciting opportunities, but of course you get very little exposure to those at the moment unless you're going through some specialist funds, or unless, as I hope we can do, is actually open up markets to some of these smaller ones, albeit they may be rather somewhat illiquid. So this actually stands us apart from what you're seeing in France and Germany. A lot of focus we get here is on things like our car manufacturing. Well, most of our car manufacturing is actually car assembly. But as you can see, the old-fashioned cars are really looking somewhat outdated. So we move over to electric. But even so, are we ever going to be able to beat the Germans at that sort of thing? Not really. Why should you bother? Go to the bits we're actually rather good at. And we know that technology is an element which has actually been extremely successful for us. One of the problems we're actually going to have to deal with, of course, is the question of what happens with devolution. Does Scotland end up going independent or not? Well, we don't know. And if you actually, it's been rather annoying to me, is unfortunately Boris has not actually been very helpful in Scotland because actually his nature and behaviour tends to cause more annoyance in Scotland rather than anything else. And the effect is it's actually made the Cranky's love child look better than she has been. Her managing the NHS up there has been awful. And the structure and operation of some of the infrastructure investment, again, has been awful. So, realistically, had it not been for Boris, I think she'd find herself in a lot more problems. We don't need Scotland to break away, and Scotland does not need to break away either. They will be considerably poorer in doing so. I do say this north of the border as well, although occasionally I do get bread rolls thrown at me. But the point is this, that actually the UK economy finds itself in a position where it can recover, not necessarily in the enthusiastic ways that we saw in the budget earlier this week, which was, I have to say, it did make Mr. Sunak look a little bit like Gordon Brown, coming up with hundreds of little bits of investment, which all sound perfectly good, another million here or billion there, and mentioning various cities and towns. But that almost gave a sort of fog over actually what was going on. What we were seeing was actually missing out on the really bigger picture. Where was the strategy to really actually see a coordinated infrastructure development? And I don't mean things like HS2, which is a complete waste of time. Connecting more faster trains down to London merely actually means that more investment goes to London. It's across the country you need to operate. Connect actually the conurbations of the north, you'll get far more bang for your buck trying to do that overall. And also then provide those areas the ability to actually start borrowing themselves and having their own markets to be able to get those investments coming in. So the balance there, I think, is actually quite encouraging. The British economy is coming back. You're seeing more investment coming through. We need some more initiative and imagination in terms of actually getting it through in terms of the innovation of further investment pipelines. And of course, one of the problems you've got in places like the North East, who've been so dependent for years on the opiate of EU funding, and of course that's gone, and they're now saying, well, can't we have replacement funding from the central government, which to an extent they have, but that's the wrong way of developing it. There is no shortage of money. It's making sure you have the mechanism of funding it from the individuals, from the pension funds, into regional businesses, and not necessarily having to go via London. Very briefly, let's look at the areas of the emerging markets and how they're developing, and then also in China. China's not going to stop growing anytime soon. The trouble is President Xi has now taken upon himself that actually is going to be much more of a personal operation for his own, and surrounding him and his chums, and has now become a lot more aggressive. You could argue this is repayment time from the 100 years of humiliation dating back to the days of the Opium Wars, where we were actually forcing the Chinese to buy our opium from India. I always find it rather funny when people start complaining about Colombia and Venezuela pushing drugs around the world, when actually we were rather good at selling opium and even went to war with China twice just to ensure they did so. But China now finds itself in the position that it wishes to assert its political authority now, having already asserted its economic authority. But the issue, though, is China actually needs America. As I was saying before, that symbiotic relationship. Because who's the biggest customer for China? And the answer is America. And President Xi cannot afford to have a Chinese economy starting to stutter. Because that way you'll find the party gets unpopular, and the party, remember, does not tolerate any opposition whatsoever. Just look at Hong Kong. But nonetheless, what you've got, that is growing. So after the world, this huge pandemic's gone through, the financial heart attacks that we saw around the world, we've seen an economy now growing at a level not far off before the pandemic, but you're going to see that drop back off again as it's to go back to longer-term, slower recovery. But nonetheless, I find that quite encouraging. So what should we be doing as investors? One is continue to invest. This is no time to be selling out. Two, you can actually then start looking at those areas which have been very heavily hit indeed and are coming back. Some of that has already gone, the likes of the airlines and things, but there'll be more opportunities. This is a period of financial nervousness, and there will be more erratic behavior. If you think the global economy is not going to fall apart, well, if you do think it's going to fall apart, it's pointless investing anyway. Go and buy a crate of scotch and live in a cave in Scotland. If you don't think it's going to, then you can invest quite reasonably. Don't have to take high risks, whether you're using ETFs, or whether you're using your individual knowledge of individual stocks, and I always like a combination of the two, frankly, be invested and getting the power of compounding of those returns. That's the way you're going to secure longer-term value for you and your family. So, global economy, post all of this, global economy will be growing. It'll be growing with the strength coming out of the United States, with the support they've got. Quantitative easing has been supported in Europe and also over here. That'll be picking up as well. And China will not be stopping it anytime soon. Xi has to keep the thing going. On that basis, now is the time to be invested. But use the volatility to your own benefit. Doesn't always necessarily buying on the dips, but study those areas which you know most about. And when you've got those periods of weakness, use that to your advantage. Ladies and gentlemen, best of luck with your investing, and thank you very much for your time.